So there's quite a lot of subjects out there that I want to talk about at the moment. I want to give you guys a bit of a portfolio update. I want to talk about the UK stocks I've been buying, the US stocks I've been buying, 2 new stocks I have also added into the portfolio. But I really wanted to do a video on Card Factory because I think Card Factory has been making some fantastic moves financially, business decisions in the last 12 months. And yet this share price has done absolutely nothing. And in fact, because the financials keep improving and the share price is doing nothing, I think the opportunity just keeps getting better and better for Card Factory. And I think Card Factory right now at this moment is coming in an easy 2x opportunity. I think Card Factory can come to a £2 stock. I think even right now, today, the stock should be about 50% higher from where it is right now. And there's not often you say that. And the other thing with Card Factory is that we have Card Factory starting to tick all the boxes of being attracting all the types of investors. It's attracting the value investors. It's attracting the dividend investors. It's attracting even the growth investors as well. Because this stock isn't only just growing 2-3%. We're actually seeing this company grow high single digit at the moment, which is incredible. And while you look at this right now, this stock is currently trading at 7 times earnings. If we look at Card Factory on a forward P right now, and on half a year's time, we're going to be in 6 times earnings for this business. Incredible. Absolutely incredible that this is 6 times earnings. And the thing is that while you wait as well for this stock to finally get to the true value it should be at, do you know what you get? You get a 4.7% dividend, nearly 5% dividend for just sitting there and waiting. So if you get a bit bored while you're waiting, you get that lovely dividend coming in as well. And this is the thing with Card Factory is that if you look at the share price right now, the share price basically for the last 2 years has stayed completely stagnant and done nothing. And quite often people fall into the trap of, oh, this is boring, I'm fed up, I'm going to sell it out, I'm going to go chase this because I've seen other things going up. But in this game, unfortunately, you've got to have patience. You've got to have patience because you don't know when, but at some point, if you keep financially executing, you will get rewarded. Prime examples of this, right, that has happened recently is Game Realms. Game Realms stayed stagnant for a year and a half, and then boom, within 2 months, we're up 50%. You look at the likes of Airtel Africa. For so long, they had to deal with financially doing amazing, but they had the headwind of the financial fluctuations going on with the currency issues. As soon as it stabilises, boom, next thing you know, Airtel Africa last year up 81%. And sometimes you've got to have those patience. And I believe Card Factory is in that moment right now where people are losing the patience. I've seen it. I've seen people going, you know what, I'm selling Card Factory, does nothing. But when you start getting to those times, that's actually normally when you start getting to the times where you might see Card Factory go, on one of those incredible runs. And I think Card Factory is getting there. I think it is getting close to where it goes on one of its runs. I wanted to make this video a little bit earlier actually, because to be fair, you could have picked this stock up at 86p early this week, a couple of weeks ago, which actually I did. I added into my Card Factory a couple of weeks ago because I went, that is just incredible value now. So since then it has had a bit of rally, but even now I still think Card Factory is just unbelievably cheap. Now, first of all, let's do a bit of a history lesson on Card Factory. So Card Factory is actually a stock that I started buying after the CV times. I looked at the stock and I went, you know what, I can see Card Factory doing really well here. The big problem that Card Factory used to have is that Card Factory had financially a bit of a tough time. It was a bit mismanaged. We had a management team in there that wasn't controlling the profitability and getting the profit up. So you had a company that had a declining profit for the last kind of 3-4 years before the CV situation. Now with the declining profitability on top, what they also had is that they had a dividend that was so expensive. It was more than the profit they were earning. And basically they had a situation where they had a cash pile that was majorly thin, as you can see here, down to about 3 million cash pile. And the debt just kept going up and up and up. Debt to equity was going up and up and up on this company. So financially it was in a bad place. And if it wasn't for the CV situation, there could have been a good chance, I would say, that Card Factory could have gone bankrupt. Now, funny enough, not many companies you say this with, but the CV, the COVID situation, probably saved Card Factory from going bankrupt. What happened is they had an excuse to kind of cancel the dividend. They cancelled the dividend. They were able to shake the company back up into profitability as well. And because of that, they were able to then pay down the debt. And what they did is said, you know what, we were in a good place here. Let's go get a new CEO in. And then what they did is they actually went and got a brand new CEO in called Darcy Wilson. He came in 2021, and he went, you know what, there's some, we've got a good foundation of a company here. We've got the debt paid down, we're growing back into revenue, we're going back into profitability now. And he went and said, you know what, we don't need to do much with the stores. We can keep opening a couple of stores, but the expansion, we've got all the facility in place for all these card printing. We need partnerships. We need international exposure. And then he went on to do partnerships like being the exclusive card supplier for likes of Aldi and Matalan in the UK. He went and made a 356 expansion into the Reject store internationally, abroad into, is it New Zealand or Australia? So all of these partnerships. And then what we started seeing Card Factory do is they started going back up on the revenue growth, and the profitability came back. And even right now, you look at the share price still hasn't recovered to where it was before the CV times, which is incredible because you do look at the company and it's in such a better place now. The debt, there was a major issue with the balance sheet. There was no cash left. The debt was sitting at 170-ish million at the peak, and now we're down to coming up on Simple Wall Street at 74 million, but I think they've actually just paid that down to 24 million, although they have made an acquisition with a debt that we'll talk about. So I think the debt pile is somewhere around 50 million-ish right now. So even where it's showing right now, it's actually even lower than here, which is great. And what they're also doing is they have now actually gone back to paying the dividend, and that dividend is also under control. But yet, we look at the company sitting at a 357 million market cap, and we look to where they were in 2019. They were actually 650 million market cap. So that even today, they're half the market cap of where they were before 2019. But yet now, they've got a company that is growing at very good rates with all these partnerships and these new expansions, and yet it's still half the value. That's sign number one that this stock is looking at an attractive valuation here. But since then, like we talked about, what are the new things coming into here? Because this is all things that Darcy Wilson has done previously with the company. He has signed these partnerships with Aldi and the Reject store. In the last 12 months, he has then now, in my opinion, gone to make this company even better. And as we look at the share price, it's not being reflected at all in the company. If you look here, the share price over the since 2023 has stayed stagnant. There was a little bit of a rise, as you can see here in the share price. We were up around about 43%, and then we had a major pullback. That pullback came down to the market. The market believed it saw its H1 update. It went, there's no way they're going to hit the full year guide, and Card Factory went on and hit the full year guide. So that also once again comes to the new CEO here is very good at managing the financials, where he delivers what they say they're going to do. Even when the market doesn't believe him, he still goes and does that. Now, since then, for me, in my opinion, this already should be up to a £1.50 stock right now. But in the last few weeks, this company has just gone to strength to strength. So if we look at the latest financials, we can see that they're growing at 6% here at the moment on the last full year results. And also maintaining good profitability on what has been a tough time with big increases in the national living wage. And then obviously we've seen them at the moment having to manage the big increases in NI and also the big increases in the wage, in the minimum wage at the moment. So in this year of 2025, a lot of their profit growth will, in the bottom line, just go into controlling the costs. But in the next few years, we're going to see the revenue continue to grow at good rates. And we're also going to see the profit continue to grow at good rates. And some of the deals that they've been signing, including this week, they went on and they bought funkypigeon.com. Now, one of my biggest criticism with Card Factory is that their online part of the business has been probably the weakest part of the business. Now, the actual Card Factory platform is starting to move up in the right direction, but the Funky Pigeon now fills in the gap of where they had a missing online presence here. Now, you can see here that they bought it for a cash consideration of 24 million. And Funky Pigeon at the moment is doing 30 million of revenue and 5 million of EBITDA. So I had a quick look on their financials, and you can see here the company is growing at good rates and it is a profitable company, which is great. Now, 5 million of EBITDA at the moment, so you're paying up around about 5 times EBITDA for Funky Pigeon, which is an incredible acquisition. Like, you would normally be paying probably around about 10 times EBITDA for this. Once again, buying a company for a very good valuation here, which is great. Upon completion, we will be the second largest online card and attached gift retailer in the UK. The group expects the acquisition to be earning enhancing in the financial year 31st January 2027, and also that there can be synergies of 5 million. So we already know that Funky Pigeon is towards profitability. Another 5 million of synergies, because obviously Card Factory already have in place all the factories in place, so they'll be able to make Funky Pigeon more profitable. They basically just need to put the website on and then shift the cards out from the Card Factory site. So 5 million of potential synergies there as well. So you could be talking to a point of view where Funky Pigeon could make them 6 or 7 million-ish a year. And from that point of view, they've just paid, they'll get Funky Pigeon back in 4 years' time. And that will generate good revenue for them and good profit growth for them as well going forward. Now, like I said, the acquisition will be drawn from a 35 million debt facility. So I said they have paid the debt off, but they've just taken that acquisition on when we were talking about the balance sheet. And they will go back to paying down debt going forward, which is great because that's what they've worked hard to get, that strong balance sheet. So it'll be great for that to happen. The board expectations of mid to high single digit percentage of growth sales and adjusted EBITDA for financial 26 remain unchanged. Profit before tax will follow a similar profile to next year as well, weighted on the second half. So we've seen before, first half quite slow, second half it picks up with the major events they do have. We've seen them do that before and they executed, so we would believe them that they would do it again. They did say they're going to bring forward investment into upgraded store point of sale system from H2 to H1. So this as well could be a major growth driver for them, because one thing that has been hitting Card Factory at the moment is we've seen incredible increases of the NI contribution and incredible increases because of the increases of wages. Well, if all of a sudden now you only need one person because you get self-checkouts at Card Factory, okay, might be a bit of a cost up front. But instead of when you get to these big Christmas time periods and you have to hire all these staff, you have to do all the interviews, you have to have 5 people working on these tills, all you need is 1 or 2 people now, half the staff, maybe even more, less than that. And because of that, one of the big things that Card Factory has suffered from the last few years is because of the high increase in wages and the NI contributions. And that's the one big thing that's going to be totally wiped out going forward, which will be a great synergy for them. And we could get to a point of view where we do see Card Factory's profit margins increase. Now, quite at the moment, Card Factory already does have pretty decent profit margins at nearly 9% profit margins. So if you imagine these point of sales increase the profit margins as well, you could potentially see a point of view where these profit margins start pushing into the 9-10%, which would be amazing if that does start happening with Card Factory. So that's something key to be watching as well going forward. So with these partnerships, it could be very good for them. And then also we've seen them expanding into the US side of it as well. Kind of forgotten about because of the Funky Pigeon acquisition, but the expansion into the US is another area where Card Factory can see potential very good growth for. And that'd be amazing. So right now, when we look at Card Factory, they're doing everything completely right. Opening up a couple of new stores, but the exciting thing is the expansion. Now becoming a serious player in the online space. You've got the expansion as well for all these partnerships. You're expanding into the US for your acquisition as well. We could see Card Factory becoming a company that is growing at very good rates, and right now is a 7 times earnings, and you're also picking up that dividend. And if you want any more sign of confidence of reasons why you should go buy this stock potentially, look at the insider front. Why do insiders buy? Insiders buy because they believe the stock is going to go up. That is the only reason why they buy. And right now, you have the sea of the insider buy going on at the moment, and they're pretty significant chunky amounts. You can see here, for example, Darcy Wilson here buying a 50k worth of shares here. You've got the CFO buying shares here. This is what you want to see. You've got skin in the game. So this is a great sign. So yeah, looks great. When you look at the competition, so the competition clearly is Moonpig. I would say Moonpig is when you look at the competition. And Moonpig is a 700 million market cap. When you look at Moonpig, they've been actually, compared to Card Factory have financially been doing very well in the last few years. If we look at the past performance of Card Factory, the growth has been very good. When you look at Moonpig, they've had a bit of a tough time at the moment. They've struggled for growth. They've struggled to get the profitability back up. Granted, they are forecast to start moving back in the right direction, but it's not been a great time for them. And with Moonpig as well, you're only getting a 1% dividend. You look at Moonpig, their balance sheet is now where Card Factories used to be, where it's a bit of a mess from some big acquisitions. But you look at Moonpig, and Moonpig right now is currently trading at 16 times earnings. And it used to be trading a lot higher, but 16 times earnings. So right now, you can go get a company like Moonpig that gives you a 1% dividend yield. The balance sheet is a mess. They've struggled for growth previously, though granted it is supposed to be coming back. Whereas Card Factory have executed, look like they're still going to continue to execute. You're getting a nearly 5% dividend yield, and it's 7 times earnings, over half the valuation of Moonpig. Now, maybe the case previously was, well, Moonpig has that kind of big online buzz. Well, now that maybe sorted with Card Factory, because obviously they've got the Funky Pigeon acquisition, and that should cover that gap for them. So you see a big disconnect, and these are sometimes the best opportunities where you look and think the market is completely valuing this at the wrong direction, or the wrong valuation. And 7 times earnings, I tell you something, guys, if Card Factory go on to deliver these financials where we see profit go from 47 million to 53 million to 57 million, and they do this revenue side of it, yeah, this is not going to stay a £1 stock for long. Like I said, in my opinion right now, Card Factory should already be a £1.50 stock. £2 is where I can see it going. And it's very rare you say that, where you're saying the stock should already be 50% higher today, and then you start factoring in some of this future growth, and that's where it gets really exciting for the business. Now, when we look at the financial point of view, on the numbers point of view, let's have a quick look here. So I've put 4%, 6%, 8% revenue growth in. I think it can achieve all that. 8% profit margins is what it's doing right now. It's very close to a 9% profit margin. And like I said, if they can get that point to sale profit margin up a little bit, you're up to a 10% profit margin as well. I put 12 times earnings in. So this is way below what even Moonpig is trading at right now. And you can see here on the low side, you're getting 80% on the low side. That would be a decrease in the profit margins. Still a very low valuation at 12 times earnings, growing at 4%, which would be very disappointing. 82%, and if you add a dividend on top, you're getting over 100% return. On the mid side, you're getting 120% return. On the high side, you're getting 164% return. And I still think that's quite conservative, because like I said, I think that when you do look at Card Factory, 6 to 8% growth is achievable, 9-10% profit margin is achievable. I think 12 times earnings is still relatively cheap. If we're going to put on like a 16 times earnings multiple of what like Moonpig is, for example, all of a sudden now you're up to a 3x opportunity there. So even with these numbers that I'm showing you guys know me, I don't like to be frothy, I don't want to go crazy, news bubble numbers, but just to show you, if the stock was to get valued to a level where Moonpig is, you're getting a 3x opportunity. If we just stay a little bit calm and look at the numbers here, when you are on the low side and you see numbers disappoint from where you think they're going to be, and you're still getting 80% upside, and with the dividend 100% upside, very attractive. But yeah, I think if they do execute, you could see Card Factory somewhere between 120 to 164% upside. Add your dividend on top, another 20% there, and they should continue to hike that dividend up as well, because they've got a lot of room to hike that dividend up as well going forward. And a very profitable business with a clean balance sheet that will lead them now to have so much more capital to throw into share buybacks, dividends, or acquisitions that we've seen them do. And those acquisitions will contribute to greater financials going forward. Like I say in here, half of these numbers here actually at the moment don't even include the Funky Pigeon acquisition that's going to come in. That's the other thing, if Funky Pigeon then does end up contributing another 30 million, and all of a sudden we're up to 610 million, and let's say that they do contribute an increase in the profit margin, you could have even more upside here. So that's also another thing that could happen going forward. So yeah, looking at Card Factory, the fact that only 2 weeks ago, I think this was a 280 million market cap. I mean, look at that there on that upside. But even now, even with the rally that it's been on, I think I look at Card Factory and it should be a £1.50 stock. And when that's going to happen, I don't know. I don't know when it's going to happen. But if they keep doing what they're going to do, it will get rewarded. Financially, great stocks always get rewarded. Sometimes you just got to have patience. And, like we said with Game Realms, you're patient, you get the rewards. Airtel, you're patient, you get the rewards. Eventually, you do get the rewards if they financially execute. It's tough. It's tough having the patient game. I've already seen a few people saying that they're giving up on Card Factory because it's not done anything for the last 2 years. Now, like I said, when more people start doing that, that's normally a sign that the stock normally ends up going ballistic. But eventually, these stocks get rewarded if they keep doing it. And you look at Card Factory, and it stayed stagnant for the last 2 years, but yet financially it stayed anything but stagnant. They continue to crush it, great acquisitions, and if they do the financials they're supposed to do, you get rewarded. And hey, if you want to, if it bothers you that much, don't worry, because while you're waiting, you're picking nearly 5% dividend yield up here anyway. So yeah, I wanted to make a video about it because there's all these concerns around, some of these UK stocks. And granted, we do have an absolute crap government at the moment that's not supporting growth and is anything but, business growth and business success. But it don't matter. When you're buying these companies, the share prices don't reflect that. They reflect the quality of the business eventually. And, if you wanted, a risk to reward on your side, buying a company at 6 times forward earnings that's paying a dividend, sorting its balance sheet out, growing at good rates, growing revenue at good rates, growing profit at good rates, making so many brilliant acquisitions. You're getting a tremendous, management team here. Unbelievable opportunities. And I'm sure Card Factory is going to eventually, I don't know when, I don't know if it'll be next week, 2 months time, end of the year, 2 years time, 3 years time. I don't know when, but at some point I'll come back and make a video on Card Factory when the stock is £1.50 and when the stock is a £2 stock, and I'll be saying, yep, we knew it was going to happen. We just had to be patient. We got our rewards, and I'll be taking a bit of profit off the table, locking in 50% gains, locking in 100% gains, excluding dividends as well. And I'll be saying, it was a gift. It was a gift there. And, sometimes you just got to, there could be a lot of noise in the background, but you got to, in this game, in this investing game, you grab great companies at good valuations, great valuations, and that is it right now. And I say multiple times on multiple videos, the best time you want to be buying stocks is when nobody wants to own them, when you want to buy them when great stocks are cheap. And right now that's the case. And yeah, I think it's fantastic, this opportunity here. So yeah, thought I'd make a video on it. Thanks for watching, guys. Have a great weekend. If you are on the Patreon, go check the video out. I did an earnings review on Game Realms and Greg's. If you do want to join the Patreon over the weekend, you can join with the link in the description. You can sign up yearly. Just click this, pay annually. You'll save 15%, and it's £5.10 a month. Thanks for watching. See you in a bit.